We're in the back half of the session on this Thursday, with about an hour or so to go on Wall Street, and the tone right now is all about positioning into year-end. Growth names catching a bid, but with bonds and policy in the background reminding everyone that 2026 could look very different from 2025. Let's start with that bond story, because it's quietly the most important thing on the tape today. According to reporting from MarketWatch, bonds are on track for their best year since 2020, but analysts are warning not to expect the same kind of returns next year. The key issue: uncertainty around inflation and the rate path. If inflation proves sticky or the Fed has to stay tighter for longer, that could push yields higher again in 2026, which would put pressure on bond prices. Equity traders are watching that closely because today's rally in risk assets has been built on the idea of a friendlier rate environment. If the bond market is telling you great year, but don't annualize it, that can cap how aggressive people want to be with long-duration growth and high multiple stocks. On the equity side, the story grabbing attention this hour is the move in AI and chip names. MarketWatch reports Nvidia and other semiconductor stocks are higher after Micron issued a more upbeat outlook for AI-related demand. That's giving the AI complex a bit of a relief bounce. But the same reporting is very clear: this doesn't necessarily mean the big AI trade is back for good just yet. Traders are treating today as a reminder that real earnings guidance still matters, but many are also saying the next lasting catalyst for AI might not show up until next year's product cycles and capex plans become clearer. We've also got a policy-driven pocket of volatility in cannabis. MarketWatch notes President Trump has signed an executive order asking the federal government to reschedule cannabis, potentially the most significant federal reform on the substance in decades. Cannabis stocks are trading mixed on the headlines. You've got enthusiasm around the idea of easier banking and lower regulatory friction, but it's being tempered by questions about how long implementation will take and what the final rules actually look like. For now, it's more of a macro and policy overhang that could keep that space jumpy into the close. In the background, there are a few under-the-radar themes that could matter more as we head into 2026. One is the human side of the AI build-out. A MarketWatch column today argues that threatening to fire employees if they don't adopt AI tools is a recipe for backlash, not productivity. For investors, that's a reminder that AI isn't just a chip and software story. It's also about execution, training, and culture. Companies that handle that transition well could see smoother adoption curves than those that try to force it. Another longer-term watch item: the policy push around so-called Trump accounts for kids. MarketWatch reports Ray Dalio is the latest billionaire committing money to seed these investment accounts, scheduled to roll out in 2026. It's early days, but if these programs scale, they could change the flow of long-term retail money into markets over time. That's not a today trade. It's a structural story professionals are starting to file away. Into the next hour and into the close, I'll be watching whether this AI and chip bounce has legs or fades as traders square up for the weekend, and how the bond narrative shapes risk appetite. Do we see any late-day profit taking in the winners of this year's rate trade? I'll also keep an eye on how cannabis names settle after the initial policy pop. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Stormstock Solutions, I'm Grant Mercer. Stay sharp, stay steady.